And good evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Sunday, July 23rd, 2023. And I'm sure the first question being asked is, why is it an Elliott wave not an update and not an Eye of the Storm podcast with the big picture technical update? And the reason is because the big picture really is coming to a swing point, in my opinion, and so it remains the same. But I will start with just a quick overview of where we are. We're going to look at the daily chart beginning here with the NASDAQ. In the NASDAQ, and nothing has really changed in that I'm continuing to map out and follow and track a primary B wave counter trend rally. And within that, as we've discussed numerous times, and not to be repetitive, but within this primary within this primary B wave, there will be three waves of intermediate degree to be labeled A, B, and C. As you can see on the chart, A and B are done. We remain within the C wave. What sits inside that C wave on an intermediate degree are five waves of minor degree, of which we have 1, 2, 3, and 4 complete. We're within minor wave 5 of intermediate wave C of primary wave B. So you can see we're in that last 5 up, which should complete this longer term, because it began in October of 2022, but it should complete this counter trend rally. Now, can we rule out at this stage that this primary B wave may just decide to go what some people would call just a continuation of the new bull market? Others might call going rogue due to earnings, et cetera, but can I rule out right now that this week, with all of the decisions, with all the economic data dumps that we're going to get this week, and really kind of capping off midweek on Wednesday with the Fed decision, what should be going on in our markets? Because what it sits right in between is the grouping that's coming out on the 25th and the 26th, and then we have additional on the 27th. So 25th on Tuesday, then we have the 26th with the Fed, plus some earnings reports on Wednesday. Then we have additional earnings reports on Thursday. So how is this all going to balance out? Well, again, let's just take a look. Where do I kind of pan out with what I call the pecking order? What sits at the top of the pecking order and basically controls the balance? So if we start at that top, I put interest rates. Interest rates at the top of the food chain, so to speak. And then what comes under that, I label as the currency. And that's the dollar for us here in this country. So interest rates, US dollar, underneath that, corporate. And what is that? That's all of our companies. That's our corporations who report. So they're third down the list of what affects their movement. Now, yes, earnings are coming out, but what's going to be more important is where interest rates go or don't go on Wednesday. Right now, the thought process is that they're going to do their promised first of possible 2 rate hikes. And that what we had in June was exactly just what they said. It was a pause. They wanted data to catch up with decisions. And it somewhat has, and that we had a couple of months of slightly improving on the inflation front. And then we had a little bit of not so bad, but inflation still being stubborn and creeping its way into several areas and several sectors. Now, having said all of that, if we get a rate hike, well, when we expect that the dollar's going to react, gold's going to react, silver's going to react, and equities are going to react, along with the treasury markets are going to react. And when we combine it as almost the perfect storm, the anticipation would be interest rates getting hiked, everything else basically starts to drop. Asset prices start to drop because it costs more to carry the long position. It costs more to do what they want to do. So again, it kind of rolls down, but I would anticipate higher rates would produce a negative reaction in the equity markets. But we have to wait. But we're going to get hints of, and I would assume, and maybe I shouldn't use that word because we all know what that all means when you break it down. But the general thought process is going to be that the Fed is likely has these numbers that are coming out on Monday and Tuesday, and probably the ones that are coming out Wednesday and Thursday as well. So they're already up to snuff on what's coming out this week to make their decision. So I'm kind of moving towards, because where I see the rate analysis that I do, right there. So I do also follow Elliott and use it on the rates for the 5-year note, the 10-year note, the 30-year bond, etc. And then, of course, I do also present it today, a big picture technical update for the Treasury markets. And basically, it's all leaning kind of in the same direction, that we're now anticipating that the rates are going to start to move back up after this pause, and et cetera, et cetera. So the narrative starts to change, and that includes the stock market, the equity markets. We're looking for the narrative to begin to change and start readapting to, well, what happens when the indexes and the components go down? Well, one thing that I believe is going to start taking place, and yet to be seen, so don't jump, but I'm beginning to feel that what we are going to start to see is that dispersion trade reverse, where instead of selling index volatility, we're going to start buying index volatility and selling the component volatility. And that'll start to present where everything starts to reverse, and the strength of trade will come to the downside, because everything gets hedged. And if we're looking at the volatility, where the volatility is going to shift and come into within the between puts and calls in terms of options, it's going to be the puts. The markets start to slide and go down. You put your premium over in the active side, and that's going to be within the puts. And so retail will be getting out of the calls for sure. But those, in terms of being a dealer in the options, you're going to be producing that. You're going to be buying you're going to be having to buy the calls. Then maybe you're short. You buy the calls and you're going to be selling the stock. So again, that downside pressure comes. And then again, if you sell puts, you're going to be selling the stock. So all the way around to reverse positions, the dealer's position to hedge all these trades is to sell. Sell, sell, and sell. So again, it's going to be heavily leaning in one direction. Now, back to the Elliott wave counts. And again, on the daily, here we are. 1, 2, 3, 4. We're in 5, of which we have 1, 2, and 3. All right. Not sure if there's going to be some adjustments made to this. I'm going to go right down to the hourly chart, because again, remember what I was talking about here, and we've done it now again, where we continue to kind of come down and put in actually a new low, but this whole structure here is so iffy. It could be an ABCA and then this crazy looking B wave, which turns into an irregular. It's in the 4th wave position, and it's allowed, and then it zips back up for whatever reason that they want to do. So that is possible, but it's not looking really good. Now, again, I'm leaving 1, 2, and 3 in place. Wave 1 would suggest that the market cannot come below 15,432. That's the high that we had on the 5th of July. That would then lead wave 4 to overlap wave 1, and that is no go. No go from there. So we'd be looking for, that would be a marker that would start to lean this picture strongly towards we're all done. And if that's the case, as I've described previously, The 3 gets moved down to here. The 4, the minute 4, would be put into place here. Now we have 1, 2, 3, 4, 5. That's minute 5. That's intermediate wave C. That is primary wave B, all right here. And we're working the first 5 down. But this needs to clear up. So what's going to give it a lot of credence is, of course, if it breaks 15,432. And not just break it by a tick or 3 or 4. I mean, to really break it and start to keep going. So on the hourly chart, we have broken below the 200s, both of them. And we did that on Friday. We broke, we came back, we halted it, and we came back down. Now the SMA has not started to turn. The EMA, the 200 EMA has. It's starting to angle, but it went flat. Where the 50 has come down, the 20 has broken below the 200s. All of this took place on Friday. So that activity draws a lot of things together. And the fact that we did go down, I'm leaving it open for right now, as is it a 5th wave or of like what I'm talking about? 1, 2, 3, 4, 5. Very, very possible. And then we still would get a rally if it comes in significantly. So, but again, if we're still looking for this 4th wave, sorry, I got to change that. We're still looking for this 4th wave. Well, then, let's look at what can it be? Well, we know it's only come down to 50. A 4th wave should not come down 618. It would not overlap wave 1. So I guess in all sincerity, there is that possibility, but I'm going to be leaning more heavily towards it's done 5 down. And that suggests that this is going to go here and the balance comes in. So here we are. We're in this point. It's like, well, shouldn't it be clear? Well, yeah, a lot of things should. But right now, we got to let the market tell us. And it is not just a small turn. This is a turn. This is a rally phase that's been in place since the October 2022 lows. And we are now getting towards the end of July. So we're honing in on 9 months, getting ready to roll into the 10th month of what would be still considered a counter trend rally. Or is that over? So again, what I look for on the hourly chart is the development of 5 waves down. And right now I can really only count 3 with a 4 and a strange place where we are right now. So again, could it be this bizarre, larger 4 and it's going to end up being a zigzag? Possible. It is possible. But again, I don't want to be stretching something to hold together something that shouldn't. So that's why I'm still going to allow in the market, but I'm leaning towards the 3 is going to come down. This is a clean 5. And the 4 is going to go there. 5, we're done. I'm giving the benefit of the doubt to the market that I'm going to wait and see. Now, just so that I'm doing it ahead of time, but we have economic numbers coming out tomorrow, and they are at 9:45 a.m. Eastern. We have the S&P Flash, U.S. manufacturing, and U.S. services PMI, the Purchasing Managers Indexes. Both are one, the U.S. manufacturing medium forecast, it's up a little bit. The other is down a little bit. So who knows what's going to actually come out and how the market's going to receive it. But, and then at 10 a.m. on Tuesday, we have consumer confidence. Then Wednesday, we have the Fed decision. On Thursday, we have initial jobless claims, durable goods, and GDP. So, and then on Friday, we have the PCE indexes, all before the market opens. So it's a lot. We have a lot before those S&P Flash, U.S. manufacturing and services PMIs. They all by themselves can throw us in a little bit of a tizzy, even though that they're not right at that, 8:30 a.m. Eastern. And then consumer confidence, sure, can start to sway the market one way or the other. It'll be Wednesday, of course, that's like decision day, and it's even listed as that, FOMC decision. So again, we're going to have to wait. So we can get this sideways move, never getting very far, not really dropping, not really rallying, just kind of going sideways. That would be what I really don't want to see, because it makes it for very unsatisfactory, day trading when they can't decide and it just kind of bebops itself around as options, as the underlying options trade. Okay, so that's the NASDAQ. Bigger picture has not changed. Even the small day-to-day picture really hasn't changed. It's sliding towards one versus the other, but they're not doing much right now. So again, who's ever in there playing right now, where it's like, we got a lot more data, a lot more opinion or whatever, that's got to come in before it'll just pick a direction. Over in the S&P, pretty much the same story, but again, exactly the same in terms of, boy, it got pretty high. So even if I'm considering ABC, and that's a B, and then we're still coming down in a C wave, and then I'm going to put a 4 under there, that remains. Here in the S&P, the market would have to break below 45.22. That's only 40 S&P dollars from where we are. Not far. And the market definitively can do it. Give it enough raw, nasty data, and this thing will just drop. In its way are going to be the 200s, the hourly 200 SMA, which is the dotted dash line, and the EMA, which is the upper solid magenta line. Both have the power to put a little bit of support under the market, hold it, and possibly even turn it. Only time's going to tell right now, but that's a possibility, which is why the count remains the same. Same deal, going to go out quickly. Let's go out to that daily picture, right? A, B, C. We have surpassed on the C, on the intermediate C wave, we've gone above 100% where C equals A. That's in. So the next logical, of course, even though it's not substantially broken it, would be 1.618, which is above that zone where we would start to consider this move to be an irregular primary B wave. Primary B wave. Or in an intermediate C as a part of the primary B, and that is where the irregular would take place. So we here as well cannot say like 100% certainty, not a way, it's not going to happen, not going to happen. It's like market's going to tell us. I can't. But again, the S&P and its components have the same economic data dumps and the same Fed making that decision on Wednesday. How this plays out is, I believe, going to be the same. When I bring it back down to that hourly chart, what can we do? Hang in a tight range. And they'll drive us crazy with the zip, 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 zip. Now, if there's a strategy you could use for trading a market that trades in a box, so to speak, or range bound. And they'll get it into a range that leaves both sides open. And it gets played accordingly in between. So we'll have to see what develops overnight, and then again what develops once the market's open tomorrow. But there's nothing really to be added other than the potential for this market, and I'm just going to add back in the larger fibs that we have here. I didn't put it in, so let me go back and do that. I dropped them all off. And right now I'm going to come back up and rebuild, and maybe I'll need to do that also on the NASDAQ. I don't think I did it, and I apologize. Here is wave 1 to we're looking at wave 5. And then I keep promising you guys that I'm going to clean this up, and then I forget to do it before I start the next update. I continue to apologize. These senior moments that kind of sneak up on you, and you're like, oh, wouldn't you say you were going to do that? And then I don't. All right, there you go. So the first one, we're still at a minor fifth wave. Here's equality, 46.45. So that's still there as an upside target. If indeed we got 1, 2, 3, we get a 4, and then we're going to go blasting up again to finish this fifth wave. Yet to be determined. Again, I'm going to bring it back down to this day hourly chart. I may have to drop the 3 all the way down to there. 1 comes all the way down to here. 2 drops to here. 3 drops to here. 4 comes in there, and 1, 2, 3, 4, 5, and it's all done. Market needs to tell us this is still in development. Now, they're having a little bit of trouble just even getting back to unchanged in the S&P. So there's a little bit of divergence kind of going on. Now, the powerhouse has always been in these. But now that that July expiration is overdone and on the books, what comes into play now? Well, they're going to have to decide why they're going to hold up NVIDIA, why they're going to hold up Tesla, why they're going to hold up Apple. What's the game plan now? Apple, because they got earnings on August the 1st or the 3rd. August the 3rd, they have earnings. Amazon earnings August the 3rd. AMAT's earnings August the 17th. So we still got these bigger companies that have earnings, but when they separate from being congealed together, in terms of if they're coming back to back on the same day or just in a group, then we will see things tighten. Now, what do we have next week? We have Google on Tuesday. We have Honeywell on Thursday. We have Intel on Thursday. We have Metaverse on Wednesday. They used to love doing this along with the Fed. So, and then we have Microsoft on Tuesday. Tuesday, Microsoft. Wednesday, Meta. Thursday, we have Intel, Honeywell, and Google. And a lot of the balance is then out until August. Could that spell and spell it could be Amazon, which is reporting on the 3rd? There's still a lot of hopes are being hung up to Amazon. And you know what? They might just do that. But it's going to be in a different atmosphere because it'll be like, okay, you can go buy Amazon if you really think. But when they start selling all the indexes, guess what? They're going to sell Amazon right along with it, regardless of what their earnings are. If interest rates are moving up and the balance of the markets are deciding that's it, the higher rates, we're out. We're changing our position. We're changing our strategy. Amazon comes out and blows the doors off. It may have an initial bop, but as far as that it's going to turn all the market around, that I hold out there under the sign of doubt. I just don't think that interest rates affects everything. So if that's going to be the catalyst, that is higher interest rates, it's going to affect everything. Bottom line here, folks, we just got a couple of days to wait. Hopefully the trade's going to be good enough that I or the people like me as day traders, there's enough for us to go in and do. Otherwise, we're on hold. And that would mean that I come in and I'll trade the first hour, maybe the first hour and a half or so. But quite frankly, what was happening last week, it was like that first 45 minutes, that was it. Then after that, it just got boring. Bounce, bounce here, bounce there, bounce, bounce. So again, we're going to have to wait and see. But my analysis goes in unchanged. Yep, we still have upside potential. We still have that possibility. I don't have a fourth wave yet that I can label as such to connect one more. That the minute fifth to the minute one, if I'm leaving my count as is. So I still have additional levels, but you can see some of those levels have not changed. Minor 5 to minor 1 has not changed. We're looking for equality. 46.45, 46.50, somewhere up in there. And it doesn't necessarily have to hit it on the head. You can get anywhere in between. Just break to a new high above there, if indeed a fifth wave is still underway. But it's still going to happen. This is where I'm going to end it. Otherwise, I end up just repeating myself. A lot coming out, a lot to see. Next update will be on Monday, July the 24th.